let me just start with rent to retirement. So if anyone's unfamiliar with what we do at Rent to Retirement, we assist investors in building out their passive income portfolio in some of the markets that we've identified to be very productive investment markets. So Rent to Retirement, we are a turnkey provider. We identify where the investment opportunity is throughout the country and build teams in those areas to allow investors to build out their passive income portfolio, which we all know will expedite financial freedom date and play a key role in the snowball calculator. But we have the pleasure of introducing Thomas, who is my business partner. Thomas Berry, him and his wife own and operate a short-term rental, luxury short-term rental property management company called Hosting from the Heart. Go Google them, look them up. They operate some short-term rentals for me that we own. And Thomas is a business partner of mine on some other short-term rentals, and they do an awesome job. Thomas is extremely knowledgeable. He comes from a background of just guest services and hosting. Thomas, maybe I'll let you give a quick introduction to yourself, but we got a ton of information for you guys that we're going to run through today. All things short-term rental. This is whether you're buying, at Rent to Retirement, we do have some short-term turnkey properties you can look at purchasing, or if you're doing this on your own, like these are all key knowledge points about where to find short-term rentals, how to evaluate, negotiate, how to finance those, and ultimately how to operate those, because it really is a much different business than long-term rentals. So Thomas, thanks for jumping on. Give us a 30-second overview of your background real quick.
Absolutely. Thanks, Zach. Thanks for having me, Chris. So I come from a background of high-end hospitality and high-end luxury lifestyle management. So for the last 25 years, I worked for private high net worth families. I was a yacht captain actually for 13 of those years, sailed around the world and had a lot of fun and had a lot of great experiences, but really honed in that high level of hospitality service delivery. And then I transitioned into estate management. So still high net worth families, but more to shore-based, working with estates on land. Again, just honing in that hospitality expertise. And then luckily enough for my wife and I, we ended up moving to Colorado here, beautiful Colorado, and we started to invest in our own real estate. And that led to what we have now, which is a portfolio of homes, some that we own, some that we manage. And the offshoot of that is our property management company, which is called Hosting from the Heart, as Zach mentioned. So we work with investors, primarily second homeowners, to create extraordinary experiences within the short-term rental industry. We've learned a lot over the years, and we look forward to sharing some of our insight with you today.
Thomas, you're not sitting at Creekside right now, are you? That ceiling looks familiar.
Absolutely. So I'm actually sitting at one of Zach and I's investment. I'm sitting here watching the water cascade down past us, and it's actually raging right now because of all the winter melt off. So it's the most picturesque setting. So yeah, this is really an investment that I identified, and Zach and I jumped on it right away, and it's been tremendously successful. So
that's just too convenient, I guess. But yeah, this is a Breckenridge. This is a 6-bed. We can go through numbers if anyone's interested, but this is a 6-bed, 5-bath or something in Breckenridge that we're just killing it on just recently. So anyways, we'll get back to Chris.
Yeah, let's do that. I actually did want to ask you guys a question about it, but let me ask now. So is this the one we were talking about yesterday, that you guys bought together and producing X amount?
This is a different one. Different property, but
okay. So you can get into the numbers whatever you want than that, but blew me away. I was like, wait a minute. So, okay, first question that we have here. The difference between STR versus LTRs, the pros and cons.
So I'll go ahead and start off with this one, and then I'll punt it to you, Thomas, to kind of give your opinion on this. But with Rent to Retirement, we mainly focus on long-term rentals. We know that residential real estate is one of the most predictable asset classes there is out there. We don't have variability in occupancy, especially if we're in markets that are in the path of progress, have high rental demand. And short-term rentals, so that's LTRs as long-term rentals, STRs as short-term rentals. But for short-term rentals, this is an asset class that it's a different business. And it's important to know that, like, what is the difference between short-term rentals? Because you really need to underwrite them differently. You need to look at, there's different financing options available. The tax structure is different. Management is a whole different ballgame in terms of whether you're self-managing or whether you are hiring a property management. And so we'll go through specifics of what to look at with both of those, but just understand that short-term rentals, it really is. I mean, I personally think when you're owning rental real estate, you're operating like a business, and you should regardless. But truly with short-term rentals, it is like you were looked at, even in the eyes of the IRS, like a hosting, like a hospitality business, and it's even taxed that way. And so you really need to approach it that way. You have guests instead of tenants. You have people coming and going. The houses need to be furnished. And so some of the big kind of key concepts, I think, when I look at, because we own both short-term rentals and long-term rentals, we own more long-term rentals than short-term rentals, but kind of the comparison is, there's short-term rental, the kind of concept that a lot of people look at it is with short-term rentals, maybe you could have a higher income. You can earn more renting out on, and this could apply to midterm, which we'll talk about as well, which is different from short-term. That's like traveling nurses, 1 to 3 months type of occupancy timelines instead of people just staying for a very short period of time. But generally speaking, if you're in a good location, you would think that you can rent out a short-term rental and earn a higher income than you can on a long-term rental. And that can be very true in many cases, depending on locations, but also you have much more expenses, right? And so, and operational costs and overhead, and you probably have a lot more variability in performance, depending on seasonality, as well as just economically driven where things are at. We saw like during COVID period of time when people weren't traveling internationally, short-term rentals just took off. And a lot of that has subsided. And the other thing to be conscious about in short-term rentals is that short-term rentals are highly, highly regulated, location specific. And this is, we'll talk about evaluating a market to look at. But this is something we need to be conscious of, because if you can't get, or if you lose your short-term rental license, or if you're in an area that has no regulation, and they initiate regulation, that could change everything if you're banking all your numbers on short-term rentals. So the big thing, generally speaking, long-term rentals, a little bit more sustainability and predictability and regular, consistent income, a lot more variability on short-term rentals, but potential to earn higher income, also has higher expenses, has some different financing options, and has a lot more managerial input and need to be conscious of regulations. And probably, I would say, also has more startup costs, meaning you need to furnish the house. If you're not buying a house that's already furnished, you have certain licensing you need to apply for, and maybe you need to update the house. Usually when we talk about short-term rentals, houses are also more expensive generally because they're maybe larger houses with higher end finishes and in better locations. But that's a quick and dirty on the surface, for my opinion, the difference between short and long-term rentals. Thomas, do you have anything to add that I missed there?
Yeah, I think you really hit it on the head when you tied the term, running a hospitality business is one of the main differences between a long-term rental and a short-term rental. And just a couple of things I want to add to the short-term rental side is to kind of, quote Sean Moore from Bodyssey, he calls them lifestyle assets. So there are some more advantages outside of just the monetary side of things, the taxation, benefits and things like that, is the fact that when you have a short-term rental, you don't have a tenant that's in there locked in for 12 months, that's on that's going to re-up that lease every 12 months. You actually can use the asset, which is super fun. For example, I'm sitting in one of ours right now. It's a guest checkout this morning, new guest check-in tomorrow at 4. So it's vacant tonight. So I can sit here and I can come by, do some work, hang out, and enjoy the property. So that's a really, really unique kind of value add that I find there. And then I think Zach has experienced this since you and I've been working together. There's a lot of fun to be had. It's kind of fun, and it's interesting to create a hospitality business and to be hosts and to welcome people into your homes. And then the response you get from them when you do create something special, it gives you kind of it gets you really excited. You get a glowing review where they just rave about it. And so you get kind of that good mojo from it. So those are the positives that I take from that short-term rental side of things. But as Zach said, there's a lot to it, and look forward to kind of going into the details a little bit.
Yeah, and there's let me add one more thing, Chris. I think that, and just to be clear, Thomas, and more so with my partnership with Thomas, is very active, managing, owning, operating like short-term rentals, right? And so a lot of it is like, we're going to be talking about like very hands-on things. You do not necessarily, like, there is a turnkey way to buy short-term rentals where you still probably have to be a little bit more engaged and hands-on, especially with the setup and the due diligence aspect. But you can position this if you don't want to be a property manager and be operating, your short-term business. You can create a scenario where these can be passive investments. It just might require a little bit more involvement on the front end. And so we'll talk about that. But that's a very good point, Thomas. The personal aspect, being able to use it, that is a lot of fun. And we'll get into the tax side a little bit later here.
That is pretty cool. Okay, next question. This is for Thomas. How to determine the right location? Location.
It's a great question. I think, in many investments around the world, that's typically the key, whether it's commercial, residential. Location is very important. In short-term rentals, that plays true as well. Although that being said, you'd be surprised at how successful Airbnbs and short-term rentals can be in obscure locations that you wouldn't normally think would be a tourist destination per se, because it's not just vacationers that are staying in short-term rentals. It's people that are going to visit their grandmother in the hospital in the city in which the hospital is. Maybe they're out of town, so they'll stop and do that. Zach mentioned, people traveling for business. So you've got business travelers all the time. That when I was traveling previously with my last job, I instead of staying in a hotel, I love to stay in a little condo or a home or something that had a kitchen and maybe a little backyard. So when I was there for a week, I could enjoy that property. So I definitely think there's a broad scope of where we can identify stellar locations. It can be in all sorts of different locations, but you just want to make sure there's something that's very unique about that area and something that's going to drive traffic, whether that is business, whether that is vacationers, whether that's an attraction or some sort of really cool seasonality. So we can dive into that, into different specific locations and talk about that. Obviously, Hawaii would be a vacation destination that people would be going to. But the Midwest, maybe more so, like I said, visiting family and utilizing it for that aspect. So
I would break it down into a macro and a micro economic or geographic location that you're looking to invest in based on your criteria and reverse engineer it. So as Thomas mentioned, when we think about short-term rentals, it doesn't always have to be the highly sought after vacation location. Even though there's a good chance that you'll be successful in those areas long-term in a short-term rental. Things like military bases. One of the first short-term rentals I owned was accidentally in an area that had military guys on constant rotation in North Dakota, which is not a vacation destination, but they've had people consistently coming, right, for work. And they were there for like 2 to 4 week stints. There's those areas, hospitals, colleges are another one. But the short-term rentals can be, and you can look up this data. You don't just throw a dart at the map and say, I think I'll try to do a short-term rental here. You collect data first to identify if there's opportunity. We'll talk about the resources we utilize and some of the locations we focus on. But there's a lot of areas that you can look at. And then on a micro, that's like the macro. And then on a microeconomic scale, you're looking like, okay, do I need to identify an area based on like price point? How much do I have to put down? What does financing look like? Are you going to use the property personally? You can have different financing options like a second home loan available, which we'll talk about those things as well. So, first build your criteria and your buy box, and then reverse engineer the location after that. Don't necessarily just be an emotional buyer either to say, I want to go visit this area and maybe I want to own a short-term rental because it sounds good and it's a bragging point. I'd be happy to do that. Like maybe the numbers just don't make sense there. Certainly look into it, but I would encourage you, just like in a long-term rental place, make it an analytical view, right? Make it an investment. And if it happens to be an opportunity you want to visit, fantastic.
Yeah, really good.
One more thing to add, I think, about location or just in choosing a short-term rental altogether. A lot of people make emotional decisions when they're thinking about this because they think about, where do I want to go vacation? And that's certainly okay in the lifestyle asset side of it, but I definitely encourage people to more look at it as more of an investment, to say, how can I find the best cash flowing property out there that will generate cash flow, that'll have an appreciating asset, so that I can use that cash. And then every year I can go to vacation in a different location. I don't always have to go to, say, that house in the Smoky Mountains, right? You get tied to it. And then when you do go to vacation at your own short-term rental, you spend the whole time kind of fixing things and worrying about things. So not to say that you shouldn't use your own short-term rental. I think it's great to use, but I think diversify. So focus on the cash flow, focus on the bit and business analytics. I think is super important.
Really good. Here's an example, you guys. We partner with someone and we have one in Northwest Phoenix. And you think Phoenix, Northwest Phoenix, nothing really out there. It's not Scottsdale, Northeast side. And we did that, and it's kind of an average neighborhood, but because of the pro baseball teams go out there and do their off-season work there during the winter, but every place else is cold. They're there in Florida, and so a lot of people need a place to stay, or they come there just to watch them. And it's just an average house, an average place, but it does well because it's almost like a seasonality in that sense. So yeah, absolutely. Okay. Next question, how to negotiate and finance an STR once you find out it fits your goals? This will be interesting. I want to hear about this.
And I think we'll both have input on this. And this is something Thomas and I are all too familiar with because as we just mentioned, we purchased this property, this Creekside one last year, and we're consistently evaluating deals constantly. And we have a request from Richard to Thomas, turn this around. Can we see this? Can we see this Creekside out there real quick? If we have time, we'll have you do a virtual tour of this one. Not that we're
absolutely
doing too much promotion, but let's look at what the creek is. All right, so this is May, and this is right where the creek goes throughout alongside the whole house. So that's in Breckenridge, everybody, and
you can stay there.
Yeah.
Do we offer a TARDIS discount? Maybe we'll see. It's off season right now.
Yeah, pretty spectacular.
That's off season. Wow.
Yeah, we back onto thousands of acres of national forest land. It's all hiking trails, and you see moose walking through all the time. It's truly something else.
But enough about us. So Jay, good to see you. Just throwing some shout outs to some rent to retirement community as well. Thanks for joining in. Jamie, awesome. Michael, Terrence, Nate, you guys rock. Michael, thank you so much for joining in. Sam, you guys are awesome. We'll do another walkthrough at the end, but we want to actually give you value and provide you some information. And we're going through this questionnaire as if like it's a journey of you're just deciding you want to invest in short-term rentals, how to decide your criteria, due diligence, finding a deal, negotiating a deal, setting up management, financing it, and off to the races. So that's kind of the progression of this webinar. But as far as negotiation and financing, I mean, we could spend a whole day on negotiation tactics. That's not what we're going to do today, but just on the surface, really generally speaking, when you're acquiring a short-term rental, I think there's two main buckets that you're looking at buying from. One is a pre-existing short-term rental, and that's something where you have rental history on it. It's a lot of the stuff that we're looking at, like we're buying stuff that's underperforming because we know with Thomas can come in there and just bring like optimized performance, and that's where the value add is. But more often than not, and probably the scenario for most short-term rentals, it's whether this is new construction or this is a property that you're looking at to turn into a short-term rental. This is a property that is not currently operating as a short-term rental. Now, that's going to limit your financing, what you can buy for, because there's no rental history on the short-term performance. However, that there could be a lot of upside potential. And this would be something where it's really important to use tools. And I'll let Thomas speak about the actual software and tools that he uses to run rental quotes on the stuff that we evaluate, but things like AirDNA, and certain things where you can actually get an idea what the property is going to rent out for. You need to understand how to evaluate a deal that does not have any rental history and how that's going to perform as a rental on a short-term side, and then look at all of your expenses. Another difference we talked about we didn't talk about was short versus long-term. A lot of the short-term or long-term rentals, the tenant is paying for all the utilities and expenses, whereas that's completely on you as a short-term rental owner. And so you need to make sure you're factoring in those in terms of the expenses. Also, management is much more expensive. It's not uncommon for management to be 25, 30, 35% because it's active management, whereas long-term, it could be 6, 8, 10% long-term, right? But it is much more engaged. And so these are all things to be important. But as far as negotiating the deal, once you find a deal that is good for you and makes sense, and you've ran all the analysis, it depends on how you're buying. I would actually encourage people, if you're interested in like creative finance options. Tanisha and I did a creative finance section previously where you can look at like seller finance and subject to and actually acquiring that property. Other than that, you're pretty much negotiating and acquiring just regular financing. The big caveat that I like with short-term rentals is that you can come in and use different things like a second home loan. A lot of these houses, this house that Thomas is sitting in right now, is a second home loan because we personally use it. throughout the year. And so if you have personal use associated with it, it opens up to being able to put less money down, probably slightly lower interest rate. So when you're buying a more expensive property, having 10% down instead of 20 or 25% can make all the difference. You just need to make sure you're running the numbers appropriately. There are short-term lenders out there that will lend specifically on short-term rentals, but they typically need a previous income on the rental property. So generally speaking, on the financing, you're looking at conventional. But I think the second home loan is really an option that might be an option for you to look at that makes it a little bit more attractive. Otherwise, you're just buying conventional. And the one thing I'll say about negotiation, because I don't want to go too deep here, but when you're negotiating a deal with short-term, it's really not a huge difference from negotiating any other deal. Typically, what we would expect is these are not dilapidated houses. You're not buying a distressed house. And, often these are going to be new construction, or at least if you're looking at the short-term rentals through rent to retirement, these are all new construction. So there may not be a ton of negotiation room for the seller. It's not like you're buying these houses and planning to do a big value add. However, the caveat here, I think, where you can really come out ahead and what has served us well is actually knowing where you can perform on a short-term rental side. Because if you know that you can earn a certain level of income on the short-term rental side, whereas it may not make sense as a long-term rental, well, now you can make that property perform way above what it would on a long-term, where maybe you can't pay the purchase price at a long-term evaluation where you could as a short-term. And so that just is like something to think about on the back end, is you have a little bit more control over the performance, and you have an idea of like where you can purchase at based on where the end performance is going to be on the short-term side. And that is, I think, going to be very, very valuable. But you obviously have to know how to run your numbers. Thomas, what do you think?
Yeah, absolutely. I think getting started, like you're saying, the way that we got started was we bought a second home. It was, so we did a second home loan on our first property. And then our second home, we actually purchased using owner finance. We just identified a neighbor close by. She was trying to sell her home, and I just approached her and said, would you consider doing a, private lending? And we did that. And we ended up, getting another mortgage, buying it out in 3 years. But that kind of got us started, right? So like do whatever creative methods you need to get into the game, and then prove yourself within that space. Whether you're going to be an owner operator, we can kind of get into the difference between owner operator and turnkey, like Zach referenced earlier. Whichever way you're doing it, whether you bring in a property manager or you do it yourself, you want to get a proven track record. Like Zach said at the beginning, you're creating a business. You're creating a legitimate hospitality business. You'll have a separate LLC. You'll have financials, everything to support your success. And so in doing so, you kind of get a reputation, and then you can utilize that and leverage that for your third deal and your fourth deal and your fifth deal. And like for us, we decided to go into the property management side of it because we loved it so much. So that might be an option. Or if you're just a turnkey investor, you're like, nope, I now have equity, I've got cash flow, I can use that leverage towards my future investments. So
cool. Okay, next question. How to set yourself apart on short-term rentals? How do you gain the edge? Meaning other people in Breckenridge have short-term rentals. What makes yours stand out over them?
This is the big question right now. And everything, as Zach mentioned previous, the pandemic, everything went through the roof. It was awesome. We could rent anything for any price, and you didn't have to try that hard, and it was great. Things are coming back to normal now. They're coming back to 2019 levels. So the crowd is really separating between the casual and experienced hosts and the professional hosts, or the hosts that have a lot of passion, or the property management companies that are well established and really know what they're doing. So we at Hosting from the Heart kind of have our success model that we follow, and it really drives from that background in that 5-star hospitality service, where we want to offer extraordinary 5-star experiences to our guests. We offer the homes that we target are those higher end luxury properties. We want to target higher rents so we can have higher margins. So we really differentiate ourselves from the crowd, utilizing those methodologies. But like our success matrix, the 5 things that I look for when I'm analyzing a home: number 1, location. Number 2, is it unique? Right? If there's 100 condos and they all look pretty much the exact same in an area, and it's all short-term rental friendly, well, you now have 100 competitors. It's going to be very hard to stand out in the crowd. But if you find a beautiful home, 6-bedroom home in Breckenridge with a live creek running down the side of it, there's only one of these. It's much easier to stand out amongst the crowd. So unique is super important. And then what we like to create is a story for each home. When you go on vacation, if you just stay in a home that just kind of feels like it's four walls and there's nothing really that special to it, it's not going to be as memorable. But if you stay in a home where there's a theme and a feel and an experience, and you could tell that the host really welcomed you into this home and wanted your stay to be extraordinary, then that's going to create memorable experiences for them, and they're going to want to come back and they're going to want to tell their friends. So having a story is really important. And then two other things that are clutch in Colorado is we're pet friendly, and we all have hot tubs in every house. If you're coming to Colorado, you want to soak in a tub after a day of skiing, and I'd say 80% of our guests bring a pet with them. So those are just some quick and easy ways to stand out from the crowd. I could go into it for days, but ultimately just be the best at what you do. Be in your market, identify who's the top performers. You can literally just go to AirDNA, and you can do the free thing and just say, show me the top 10 performing properties revenue wise in said area that you're looking at. Look at those top 5 and go, what are they doing? I'm going to copy them. I'm going to be 10% better than them.
That's huge, Thomas. I'm glad you brought that up. You don't have to reinvent the wheel. This is where owning short-term rentals, and you can do this stuff even if you're not self-managing, right? Like you can work with your manager on creating some of these things and have your personal touch and influence without having to fully manage the property. But this is where owning short-term rentals is. I think it's fun and exciting beyond just the personal use aspect of it. So there's one resource that Thomas mentioned is AirDNA. If you're unfamiliar with that and you're interested in short-term rentals, that's a website you need to be intricately familiar with. I'm sure Thomas will give us some other resources as well, but that shows you kind of general pricing and, performing assets in the area, kind of some statistical analysis on a lot of key data points and KPIs where you can look at to say, and on your both evaluating a market to see if you want to own a property in there. And also if you do own a property, how do you perform that property at the top 1% or top 5% so you can really increase your income. And so, yeah, if you have, I think the best point you made is looking for a property that isn't the run of the mill. If you have a 2-bedroom, 1 bath, and there's at 1,000 square foot condo, and there's 1,000 other ones of those, you're really limited, right? Based on where the market is in terms of your ceiling and your floor in terms of your income, because it's just run of the mill. But you can create that. I did a recent kind of just quick, I guess, content piece about like the 5 things that I think really have allowed us to be successful in some of the short-term rentals. And just to give those 5 key points out right now is one is dynamic pricing. And pricing's weird with short-term rentals, and it's kind of counterintuitive sometimes. You would think that as things get closer, and it's still vacant, you keep dropping prices. That's not necessarily the case. Usually prices start high, far out, and then they come down. And then, as it gets closer, they go back up again. But the point is, like, you need to have a pricing tool to understand where you're optimizing your pricing. That one thing alone has made us well into the 6 figures of just pricing appropriately on our short-term rentals. I think you use Wheelhouse. Is that right, Thomas? Is the software?
We used Wheelhouse. We recently changed to a company called Rented, but very similar. The technology is evolving. It's getting better and better. When we first adopted dynamic pricing, 5-6 years ago now, we instantly saw a 40% revenue increase. That's
huge.
What? Wow.
Yeah.
Let me go through the other 4 real quick here, Chris. So number 1, 5 things to make you stand out and make your property successful. 1 would be dynamic pricing, which we just talked about. Use a software tool for that. Number 2 is pics. You got to have professional pictures. Like, just when you're looking for a short-term rental, I mean, if I see terrible pics or no pics, I'm skipping that listing, right? Like, you need to pay for professional pictures. And you need to stage those pictures and make sure they're clear. Pay for that. Number 3, as Thomas mentioned, create a story. And this is where you can really make your property stand out, even if it is like that run-of-the-mill condo. Add something unique to it, even if it's a guest service, even if it's something unique about it. Just make it stand out. That's the story aspect of it. The 4th thing is 5-star reviews. This is, just something I learned from running a business in general, but also your business and short-term rentals. If you want 5-star reviews, you have to prompt them and you have to ask for them. And then, and then you congratulate people for writing those. Like, you have to actually ask for a 5-star review. And it's important that you showcase those, because the more reviews you have, the more people are going to be, reading those. Those are really important. And that's why sometimes it takes some time to get your short-term rental off the ground, because year 1 is not optimal performance. You need to build up that track record and that review section. That way you can increase the income on it. And then the 5th thing I would recommend is advertising on all the platforms. and using all the software. So many times we see these short-term rentals that are just on VRBR or just on Airbnb, or, it's like, if you really want to make this a business, create your own website for it, have it listed on all these platforms, and make sure you get as much visibility as possible.
So next one is, I know we got to move kind of quickly here, is tax breaks on short term.
I know we're running over, and we want to leave some time for Q&A. So yeah, we'll go through these quick, Chris. Thomas and I are excited about short-term rentals, and we can become rather long-winded. Short-term rentals, the big thing is they're normally taxed, if you're at 7 days or less is the average, they're taxed as like a commercial property. Remember, this is considered more in the tax eyes as a business, as hospitality. That means your depreciation on a single family house that's operating as a short-term rental is 39 years. It is not 27 and a half years. If your average stay throughout the year is 7 days or less. But the exciting aspect of this, if you're participating, and I'm not a CPA or attorney, but check with your CPA. If you're participating in some of these things that we talked about in the management or the advertising, you could likely take an accelerated depreciation, which, if anyone listens to me, I talk about this all the time. This is a huge benefit, especially right now. So if you have a, $1 million short-term rental and you're running an accelerated depreciation on it, usually mine come in. I think on this one Thomas is in right now, it came in at 40%. And this is a multi-million-dollar house, but we had 40% of that we were able to take in year one to wipe out taxes from all income sources. Now, to do that on long-term rentals, you need to qualify as a real estate professional, which means you need 750 hours annually dedicated to your rental income. You need 500 hours of material participation. You need to be like an active investor or have a large portfolio. As short-term rentals, there's a loophole where if this is your first property and you own one short-term rental, as long as you're participating and meet that criteria, you can take accelerated depreciation on that against all your asset classes. And that's the biggest key point. I think that's really important to know. If you want to know more about that or anything else, like, reach out to our team, let us educate you on that. And we'd be happy to share more information on that. So I think that's all we really need to say on taxes, probably. The question Chris posed was how to find, or how important is it to find the right property management? I mean, this would be true of any property that you have property management on, right? This tends to be the most challenging aspect in many cases. But the most essential piece too is having the right property manager, regardless of the asset. But certainly on short-term rentals, your property manager is a partner in the deal. Whether they're a true partner or they're just operating it, like, they are going to be the ones engaging with your guests, not tenants, guests, on a regular basis. And they're going to be the ones solving problems, marketing the property, taking care, in short-term property management, it varies across the board. One thing I would say in my personal experience, usually the large companies like Evolve and what is it, Because? I don't know. Thomas can talk about the national ones. Like, the larger ones, yes, they're lower fee, but typically that's not going to be the company that's going to give your house the attention you want it to. You find someone that is highly skilled, highly knowledgeable, highly motivated, and is just a good people person to operate your house. And I think that's the key things. But Thomas, who is the rock star and property manager that just kills it in short-term rentals. I mean, what's your opinion on how to find the right property manager and some things that you do that you think set you aside from other property managers?
So I think probably the most important thing you can do if you're going to enter into investing into short-term rentals is to identify a property manager right at the beginning. It's just like if you're going into business, you need a lawyer, you need all your people around you, your team. Before you purchase your short-term rental investment, identify a property manager, do your vetting, do your due diligence, select the best one in your area, and work with that person to find that asset, and then work with them to make sure that you have a plan for success. A lot of times I've seen people go out, they buy something on emotion, and then they go, okay, now I'm going to find a property manager. And then they find out, well, there isn't really any good ones in the area, or nobody's taking on new homes. And then they're kind of in a pickle, that type of thing. So that's the first step. Find somebody right away and work with them. And so when clients come to us, they're looking to invest. I have steered clients from looking at a 2-bedroom condo in Keystone to buying a 5-bedroom home in Fairplay, because at the end of the day, it's about the numbers, right? And so I was able to give them that insider knowledge that I have of a market and an opportunity that was much better than what they were initially looking at. I love real estate agents. I have a lot of friends that are real estate agents, and they work, but they will tell you whatever you want to hear to sell a home, typically.
Yeah.
don't necessarily have the correct data on short-term rentals. So the way I would find the best property managers is, again, you can either go to your area or whatever, or any area you're looking at, go on Airbnb and punch in your criteria. If you're looking at a 3-bedroom, 2-bath home, punch in your criteria and see the top 5 homes that come up. Those top 5 homes that come up are the top performing homes. They're in the highest area in the algorithm. So they've got great reviews, they've got everything like that. And then scroll down and say, who's your host? It might say Sue is the host, and she might be a one-off, or it might say, Joe's Property Management, and say, okay, great. Google Joe's Property Management, go look at his website online. Is it impressive? Look at his properties. Are their calendars full? That's always a good indicator, right? And then interview them. Identify the top 3 performing property managers in your area and do your due diligence. Interview, and see if there's some synergy too. Like, do you like them? Because you're going to be partners, like Zach said.
Yeah, and we've hired you from a property management perspective. That's a key point about finding them first, because then they can help you in your due diligence, right? And evaluating properties like, hey, what is the performance of this property going to be like? That way you're not pulling that data on your own. They can help you run expense reports. I mean, that's just been instrumental in our partnership, Thomas, of having you identify and run numbers and analysis and identify potential too, right? So I think that's key. Do we need to get some of the
local market knowledge too? If you're investing at a state, you don't know, what the things you need to know about that local municipality. So we have that information. We can help. We know what snow plowing is going to cost. We know what gardening is going to cost. So we can build a proper pro forma.
Chris, do we need to get to some of these? I don't know how long we have. Do we need to hit out some of these questions? I want to make sure we're not leaving people hanging.
Yes, we do. So let's start.
Okay, I'm going to run through this quick and just answer these so we can get as much as we can. So put in your questions in the Q&A, guys. We'll just run through these. So Taryn, I see one SDR in the R2R inventory sheet. Is that all that's available, or is that accurate? So we have multiple, but it's usually based on location. Right now we have, at least with the short-term stuff that we have stuff in Orange Beach and Gulf Shores, Alabama. Now those are, higher priced properties that we talked about. There's all the numbers on furnishing, things like this. We also have some other stuff, different parts of Florida that could be operational as short-term rentals. Some of the new construction we have in these areas could be also short-term rentals. But the stuff that you're seeing in Orange Beach right now at today, those are the ones that are available. We'll have some coming up in the next couple of weeks. So just know that while we don't have a ton of availability for properties that are operating already as a short-term rental. Those are the ones that are available. Keep in mind on the pro forma when we're running your analysis, that's year 1 expected performance. As we talked about, it usually takes between year 3 or 4 with an established presence as a short-term rental to really increase your optimal performance. So with short-term rentals, that pro forma could be grossly underestimating. It's very conservative, but it's grossly underestimating the performance year 3 or 4. You're going to have a much larger increase in income year after year as you get more reviews and repeat clients or guests and things like this, much larger than you would in a long-term rental where it's maybe 3 or 5% increase. We would expect a 20-30% increase between years 1 to 3 or 4 in rental income. That is an important thing to note. Joe says, so you've talked about short-term and long-term rentals, but do you also cover medium-term rentals? We talked about it briefly for time purposes. We won't get into it. Medium-term rentals are just rentals that you have, I always use the term traveling nurses, people that are usually on a 90-day range. They have a short-term rental. This is very geographically dependent, has a lot of opportunity around things like hospitals and typically, great quality tenants, usually no vacancy if you can get in these rotations. Houses need to be furnished. And you're not subject to the regulations that you are with short-term rentals. So if there's an area that has a lot of short-term rental regulations, midterm rentals could be an area. Is Couch something, or Furnish Finder? Is that the website? Furnish Finder is a great resource to get information and, put your house up for midterm rentals and stuff. So furnishfinder.com or something like that would be a good resource for midterm rentals. Anonymous, let's see. Can you go over some of the resources that you use to evaluate short-term rentals? AirDNA. So that's a good one. AirDNA. Thomas talked about the pricing software that we use. It used to be Wheelhouse. Now is it Rented, Thomas? Is that what it is?
Yeah. For analyzing, AirDNA, Key Data is another really great one. It actually uses real data. AirDNA is kind of scraping, public data.
Key Data, like KEY data.
Key Data
okay.
is excellent. And then data Rabu, RABBU. Weird name, but it's a good analytics site as well. Great for analyzing a deal right up front.
And then of course, yeah, Airbnb, the VRBO, and like things like that. I mean, you can also obviously gather data from there, but those are some great resources. If you guys want, additional resources or need those, just reach out to my team. They'd be happy to share that. Where do you advertise? What software is available? We don't advertise the software. That's just resources that we recommend. Also, I shared in the link. I'll do it again. So we sell short-term rentals, turnkey short-term rentals. We don't have a ton of them, but we have some that we like, that we have a track record with. But also we have a partnership with a company called Virilio, VROLIO. You can visit this link, rentretirement.com/find STR. Now, this is a different company. They're just offering an incentive. This is part of being the rent to retirement community. They actually have data points as well and will help you identify criteria, purchasing criteria, and identify a short-term rental in a different market. With this, nothing to do with rent to retirement, but it is, basically a team to help you identify markets based on your criteria to buy short-term rentals. That's Virilio is their company, and you can view that via that link. Okay. Let's see, how experienced of an investor do we need to start? You don't necessarily need any experience. You can, but I would say short-term rentals are a little bit, actually quite a bit more involved than long-term rentals. My personal recommendation might be a good idea to start with a long-term rental first, as it's just a little bit more predictable. However, you got to get your hands dirty and get some firsthand experience and actually learn. That's how you learn is by investing and also leveraging teams, right? Like my team at Rent to Retirement, the TARDIS community. We're all here to help you and guide you with whatever asset class you end up buying. So I think that sets you apart and sets you up for success is by having that support group and kind of mentorship throughout the process. What is the minimum number needed to get involved? If you're talking about buying, because it's not specific, if you're talking about buying short-term rentals, if you're buying it with a second home loan, usually it's 10% down. If you're buying it just a normal investment, 20% down on single family of the purchase price using conventional financing. If you're asking about like TARDIS or anything else, you have to reach out there. Yeah. Is it still all right? Nate is asking, this is one of our investors asking about benefit from tax benefits using a property manager. Yes, but there's a caveat with that. Like you got to be involved to some degree as well. So I would say, let's have that conversation offline, Nate, and involve our tax strategists and CPAs, because you just need to have the right plan. But big picture is yes. Do you have turnkey short-term rentals? What's a typical monthly cash flow? Troy, we do. It's, go to rentretirement.com, look at the inventory. We have some in Orange Beach. Also, just reach out to my team because we have some stuff that's not publicly showcased. That is short-term rentals. And they're like, 12 or 13% cash on cash return. If you're putting, I think 20 or 25% down year one, again, that's year one income. Your income on your short-term rental should increase quite dramatically year after year as you have a more established presence. That's just typically how short-term rentals operate. Thomas, you taking any clients in Colorado? Why don't you punch in your website in the chat box so people can find you?
Absolutely. We are looking to maintain a boutique portfolio. So currently we're at 25 homes we're onboarding for at the moment. We're looking to shoot to get to about 35. So we have about 5 or 6 different positions open, looking for high-end quality luxury homes, kind of like the one I'm sitting in now.
And we did get some comments that you got apparently the screen switches when the speaker does. So we'll, at the very end, we'll have, for people that want to stick around for it, we'll have Chris shut off the screen share and have you do a quick run through just to the main level of Creekside. But you got to be talking that whole time. So you got to give us the virtual tour. And Thomas operates in Summit County luxury type rentals and he truly is like top 1%. So I'm sharing all my secret resources with you guys here. What is the pros and cons of medium-term rentals compared to STR? We already covered that one a little bit. Medium-term rentals, less, no regulation on them, a little bit more niche, right? So maybe not true vacation areas, but I would say we'll maybe do another topic or webinar specifically on midterm. Yes, traveling nurses, among other people, like military bases again, are places where people are staying longer, usually longer than 30 days. right? Less than a year, longer than 30 days would fall into this category of midterm rentals. And it's really a niche type of clientele. So that's just something you have to, and anonymous again, I don't know what you mean by how to retrieve property. So that's about as quick as I went through on the Q&A. Thomas, Chris, anything else to add there?
I think the one important thing on the midterm, it is an opportunity when you're in we didn't really get into regulations. Regulations is a big part of this. A lot of places are clamping down on short-term rentals, not allowing you to do them, or it has to be your primary residence, which means you'd have to rent it like a room in your basement or something like that, which is not appealing to a lot of people. It can be a great little side income producer, but as an investor, you want to identify a property that's in an area that does not has common sense regulations and allows you to get a license to operate as a short-term rental operator. But if there's an area where that's in place, if anything over 30 days is not considered a short-term rental, so that you could buy an asset in an area that is regulated and operate without regulations and welcome traveling nurses, traveling doctors, like Zach mentioned. So there is an opportunity there. And I think that if you do it right, there's an opportunity to make a larger margin than you would with a long-term rental and have more flexibility with the use of the space.
That should be one of the first things you look up is the regulations in that area. For all our Hawaii folk that, there's a lot of regulation there. Honolulu, for example, is really basically stopped offering short-term rental licenses. A lot of places in Colorado mountains, Breckenridge being one of them, in most areas in Breckenridge, you cannot get a new short-term rental license. So it's really important to understand, what the regulation is. Sometimes areas that have no regulation could be a little bit dangerous as well, because they could come in and change regulation. You may not be grandfathered in, right? Thomas and I are looking at a property now that we're actually looking at a business license on instead of a short-term license. That could be something if it's going to be, this is a larger house, it's going to be like an event center as well. So these are all things that just know the regulations. And again, that's why it's important to connect with the right people first and build your team like the right property manager. They will help guide you on where to find answers on regulations. All right, Thomas, show us a little bit of hosting from the heart. Marketing pitch here on why Creekside is the premier Breckenridge house to stay in.
Absolutely. So when I first came up to this house, when you pull in the driveway and you step out of your vehicle, the first thing you hear is just this water rushing, and I got goosebumps right away. And I said, "Oh my gosh, that's unbelievable!" As we mentioned earlier, it's got this incredible creek that flows through it. But I'll do kind of a walking tour. So the home is 40 years old. It's got a lot of character to it. It's completely one-off, architecturally designed home, and it was actually built to follow the creek along this hillside here. So it's not your traditional kind of rectangular squared house. Has a really cool layout to it. So this is the great room that we call it here in Colorado. You got to have the quintessential great room. This is where the family is going to gather. But again, from everywhere in the house, you have these unbelievable views of the creek and the forest surrounding. It's very, very private. No neighbors, any other homes, just forest, evergreens, conifers. We've got kind of like a classic furnishing vibe here. The home actually came fully furnished. It's all luxury furnishings. It was completely remodeled before we purchased it, so we didn't have to really invest a lot other than soft goods and onboarding. All new gas fireplaces throughout. You've got, this is kind of the entertaining area. So you've got a game table here where you can play chess or cards with your friends. Again, beautiful forest views. Coming into the wet bar area here, full wet bar, all the setup there. Pool table, of course, you got to have the recreation as well. Kind of got these cool low beam ceilings here. The thing we really fell in love with this house was these hand carved. These are from New Mexico. All these doors are all hand carved. This is something that they kept after through the renovation, which is really unique. Come through here to this the dining room. We can seat up to 14 people here. We do private chefs oftentimes. We do micro weddings here. We do corporate events, things like that. Gas fireplace again, and then check out this view again from the dining table. Just extraordinary. As we head here into the kitchen area, really open concept. Sorry, it's not clean right now. Vaulted ceilings, open kitchen, walking out to the deck. Got a nice, we call this kind of the coffee lounge, is where we chill out in the morning and have coffee when you're on vacation. Again, those custom doors.
Will your internet hold through? I don't think we need to go upstairs on this stuff, even though I know you want to showcase off your bunks that you put in. Will the internet hold through if you can go outside and show the creek? And then I think it'd be interesting. Let's talk about the numbers of this, right? Let's talk about the investment side.
So let's see if you can, let me know if it cuts out, guys.
Yeah, we got a few more minutes.
Talk a little bit, Thomas, so we can hear you.
Okay, sorry. Yeah, so I'm on the deck here. Can you hear that sound, the water rushing? I don't know if that audio is transferring, but
Yeah.
so multi-tier, you come up top here, we've got a hot tub area, which is unbelievable at night under the stars. This is a great little area for having, say, a little micro wedding. Imagine this is the backdrop. So
Yeah.
pretty cool.
So question, off season, on season, what does this normally go for per night? Numbers.
Sorry, I can't hear you because of the rushing water.
Oh, okay.
Chris,
this-
Chris, you can bring your Speedo out to Breckenridge, and we'd have you and the family stay.
So I knew right out of the gate that this was going to be a home run. I called Zach immediately. I said, I found this thing. This is it. We got to get this. So we got it under contract. What we do is we went live with it right away. It was a previous short-term rental, but the previous owner was using it a lot and had a bad management company. And so they had done, I think the previous year in 2022, they had done 100K in revenue. And I was like, oh my gosh, that is way, way low. I do more than that with 1-bedroom condos in Summit County. So right out of the gate, we came in, we did all of our hosting from the heart, special touches and stuff like that. We remarketed it on Airbnb and Vrbo. And I think it was within 5 weeks, we hit 100K in bookings in the first 5 weeks of being live. And so instantly it was a massive hit. We went online with it January 11th. So we're, a few months into the season here. My projection on this house was, I think it was 275. And I think we're on target to hit about 315 this year gross revenue.
And we paid full price for this house pretty much. We really didn't negotiate it, again, because we knew the income potential on it. And that's where the negotiation came into play. We knew it was in a highly sought after area. We knew that the regulations in Breckenridge, because this is just outside Breckenridge, the county regulations, we knew that, there was going to be increased opportunity to rent this house out as well. So this one, we didn't negotiate on price. We just bought it because we knew the numbers would make sense and tried to close on it. We used a second home loan to purchase. And because we didn't have to do a lot of renovation, it was fully furnished, we were off to the races, right away. And really the key is marketing it appropriately, having Thomas put his, nice touches on it with the photos and just the story of it. If you go to hostingfromtheheart.com, you can actually see this property that's showcased. You can see some other ones that we own and operate in the area to just get an idea of like how we showcase these things. And Thomas does an excellent job on them.
Perfect. Good. So we're at the end here. We're a bit over an hour and 15 minutes. So I wanted to thank everybody who came on and checked us out, checked Zach out, checked Thomas out. You guys got a ton of information here. I'm excited to when you guys are working with us, just talk to your coach. If you're not from Zach, about maybe this might work for you or not, I don't know. And then we can get you over to Zach and then run the numbers with Zach, our coaches, and make sense or doesn't make sense for you. So, but I'm glad you guys all came on. Thank you, Thomas. Thank you, Zach. Appreciate your time today. So everybody go get them. Go ahead.
It's been a lot of fun. Thanks, Chris. And yeah, if anyone has any questions about short-term rentals, about how to add to your snowball with long-term rentals as well, because while short-term rentals are exciting, it's good to have those, your slow burning fuel and those long-term rentals that are just real predictable. In addition to the short-term rentals, I always encourage people to have a diversified portfolio. So our team is available to answer any questions you have and, look at some of these properties. So.
Okay. Last words, Thomas.
Yeah, we'd love to. If anybody wants to come to Colorado and come visit us, we'd love to host you. Go to hostingfromtheheart.com, reach out to me. I'll give you 10% off a stay. And we'd love for you to leave us a glowing review after you have an excellent time.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.